Hi, and welcome back to another monthly market update for the Columbus, Ohio real estate market. I'm Ryan Deeter with Key Realty, and today we're going to dive into the January 2024 numbers, the first month of the year, to see how the year has kicked off and started for us. I'm going to compare it to the previous years to see if there's any differences. But before we get into that, if you haven't subscribed to this channel, please subscribe and like this video so other people can find this information. And hopefully you find this helpful, whether you're looking to buy, sell, or invest in Columbus. My goal is to make this information useful for you to make decisions and make good decisions moving forward. And if you want to have your individual questions answered, please reach out to me at ryandeeterrealtor@gmail.com or just simply Google me and you should be able to find my phone number as well. With that said, let's dive into the data here. All right, we're going to dive into the January 24 numbers that the Columbus, Ohio board puts out for us again. Again, this is the data that you have access to from the Columbus, Ohio Realtors page if you want to go dive into these numbers yourself as well. But this should be a shorter one because we're just really looking at the first month of the year. And I wanted to kind of just point out some trends, things we're seeing, and kind of the overall picture of where the year is starting out at. And so if you haven't yet, actually go back and watch my yearly predictions, a little bit longer video of what I expect to happen this year. And we're falling right in line with kind of what I've talking about here. In January every year, I'm going to jump down to the very bottom here. Actually, this graph is going to be helpful for today because every year in January, it's where the price really bottoms out for the year. And, the peaks are always, really May, June, and then it comes back down in January, not quite down to where it was last January, but it falls in the fall and winter. Then January really is the bottom, typically, sometimes February, but mostly time January, and we start to see that the spring market start to pick up. And it's been very obvious these last few years. Even last year when we saw high interest rates, we still saw that spring market, that frenzy in the spring. And what we're seeing here is the same case. Now we bottomed out. This is, if you look at last month's, the average price this month is 331. Last month it was 345. So almost a $15,000 difference there. But we still are seeing, compared to last year, almost 10%, 9.4% a growth compared to last year. And that's always what I'm looking at holistically when we're talking about the market. And are we seeing growth or decline in pricing and stuff like that? So, never really concerned about those month over month drops as we see those every year. Sometimes you may see some news headlines saying the prices are coming down, alert, panic because prices are coming down. It's like, no, that's normal every year in the fall and winter. And, if we want to compare that year over year, and that's what these numbers are showing compared to last year, we're seeing a 9% average price, almost 9% median price, and then a 6.7% average price per square foot. Now, again, looking at those numbers holistically, kind of taking them all three into consideration of what direction the market's going. And a lot of this just depends on the particular houses that hit the market that month and what sells. So, but as a whole, things are selling for more than they did last year, but they're still selling for less than they did last month. And so that's what we're noticing. And that's what I expected this month. Sometimes we see a little bit earlier uptick, but nothing new here. And I expect next month to start showing some increases in these numbers compared to the month over month increases, and of course year over year as well. And so, I'm still seeing a lot of homes sell. And one thing I do want to point out is we are starting to get an uptick in inventory, but we still are low, compared to pre-pandemic numbers. We are still down compared to pre-pandemic numbers, and that's what's keeping pricing up, even though interest rates are up, of course. And we're still now seeing a lot of people that held tight or that are wanting to make a change that didn't make a change in the last few years, particularly the move-up buyers, people that have been in their house with 3% interest for a while and are, for whatever reason, whether their family's grown or even changed, whatever that looks like, they're now, have sat in their home longer than they normally would have and are looking to move up. So I'm seeing a lot more of that, and it's going to continue to keep these numbers, growing, and I think going to keep the numbers moving up, which is good news for our first-time home buyers. We hopefully will start to see some more first-time home buyer homes open up as well, and get some inventory for that direction, because that's been the struggle right now. The first-time home buyers are really struggling with finding homes for what I would consider an affordable price for them, and finding the smaller homes. So anyways, that's kind of what I expect these next few months to start seeing that happen. So a few more listings, but with those listings, when it comes to move up buyers, those listings are also buyers. So they're kind of a wash when it comes to, new inventory hitting the market, but you also have more buyers entering the market. So of course, real estate's all about supply and demand. And we're seeing a little uptick in supply, which is good news for buyers. But with that supply comes also more demand. So that's where I kind of see prices continue to rise and continue to hold steady as we move forward. And seeing this number kind of this year, looking back on last year, as we've seen, the high interest rates did not devastate the real estate here in Columbus. In fact, it really kind of just struck on as normal, as people don't realize that the economy is only one factor when it comes to residential property. The real, driver of residential property is life change, and a lot of life change is still happening. And so we're still seeing that happen. The normal, marriage, kids, divorce, kids moving out of the house are still happening here. So those are things that can really pay attention to. I do want to share one more piece of information when it comes to interest rates. This is an article from and chart from Mortgage News Daily, which surveys a lot of banks across the country to see what the average 30-year fixed, 15-year fixed rates are. This is based on the 30 here, this chart. And then the blue line's actually the mortgage applications that come in as well. So you can kind of see the direct correlation between interest rates and mortgage applications. I've got this kind of narrowed in the last couple years here. And you can see where those interest rates started to climb, the mortgage applications declined. At the same time, we had so many buyers in the market in 2020 and the years after that even though these numbers and the mortgage applications declined so much, we're still seeing plenty of buyers out there for the amount of homes we have. The inventory is low, even though buyers' demand came low, inventory became low as well. And we're still seeing pretty steady growth, and good homes that are priced fair are selling really quick. But with that said, this is obviously something that could help you as you're making a decision. If you're investing, this is a huge factor. If you're residential real estate, I think this is something your personal home is not quite as, obviously it impacts you tremendously, but it's not the only driving factor when it comes to, your personal home as an investment. This makes a huge difference in what makes a deal or not. With that said, something just to pay attention to, if you look at this last year, you can kind of see the ebbs and flows of these rates. And I kind of expect the same thing these next few years, is that we're going to see some ebbs and flows, especially this is, really spring here. Then we saw summer, and then, we saw the fall kind of come down. And I expect the same thing. So this spring, if you see those drops, if you see a drop that gets down, and last year, I think the bottom ended up being about 6. What is this? Let's find, actually, let's zoom in here. We're zoomed in May of 23. So let's go back to January right here. The bottom was end of January, and you saw about 6.9, and the peak ended up being in what is that? October. And it was, 7 and 3/4 almost. So you can see there, but the ebbs and flows coming out. So I wouldn't be surprised if we see that. And if you see the dip, come down, it maybe, we're kind of in that right now, where we saw the bottom get about 6.6, and now we're up to about 7. If you see that come back down, it may be a good idea to lock in a rate if you're actively looking, if it makes sense. Sometimes there's a fee to that, sometimes there's not. So just talk to your lender, talk to them about, like, hey, if you see that dip come down, it may be worth, just seeing if you can lock that in before it dips back up again. So just one thing to think about. I do just something we are, watching, and as rates, if we're waiting for those rates to come down. The Fed did say they're hoping to lower rates this year, depending on a lot of the financial numbers that come out. They expected a couple drops. I don't expect that to happen until the latter half of the year. I think the numbers, some unemployment and the inflation numbers weren't quite as good as they hoped to this last January. So I think they're going to kind of hold steady and see some ups and downs, some small tweaks in the market here. So don't expect those numbers to come crashing down anytime soon. At the same time, there's still, good homes are still selling even with these rates. So with that said, hopefully this is helpful for you in making your decision what's best for you. Thanks again for tuning in. Again, I'm Ryan Deeter with Key Realty. If you have any questions, please feel free to reach out to me directly. And if you haven't yet, please subscribe to this channel, as it helps other people find this as well. Have a great day, and I will look forward to seeing you next time.